Good evening and welcome to the India Development Debate right here on ET Now. I'm Sandeep Gurumurthy joining you from our news centre in Mumbai. Joining me in Delhi is my colleague Supriya Shrinate. Banks in India have never had it so bad. High level of corruption, reckless lending, poor credit demand and greedy promoters have all contributed to the biggest economic headache of the Modi government. The country's top bank, the State Bank of India, for instance, today reported a loss of over $1 billion for the fourth quarter, its biggest ever, thanks to willful defaulters like Nirav Modi's and Vijay Mallya's who are absconding now. In fact, bad loans of private and state-owned banks put together have soared almost 380% to over 9.5 lakh crore rupees as of December 2017 from around 2 lakh crore rupees in March 2014. While it is unfair to put the entire blame on the Modi government, the lack of a proactive approach by the centre and the RBI has perhaps contributed to the NPA mess.
To the government's credit, though, the New Companies Act of 2016 and the Insolvency and Bankruptcy Code have made sure that the delinquent promoters don't go scot-free easily. The first takeover of stressed assets under the bad loan resolution process has just been concluded, with Tata Steel acquiring the assets of Bhushan Steel. IBC may have made insolvency proceedings faster in line with many of the developed countries, but there are no foolproof measures to prevent the big bank loot by the likes of Nirav Modi and Vijay Mallya. As the Modi government completes 4 years in office, we take stock of the state of affairs in the Indian banking system on our special edition of the India Development Debate tonight. All right, joining us on this very special edition of the India Development Debate tonight as we take stock of India's banking sector is a very eminent panel. Mr. Pradeep Chaudhary, the former chairman of SBI, T.T. Ramohan, professor at IIM Ahmedabad, Maithili Busturmat, our consulting editor, and of course Syed Zafar Islam representing the BJP and Charan Singh Sapra representing the Congress party. Pradeep Chaudhary, it's only been fair that I start with you because you really know the kind of rot that exists in Indian banking, what are the issues that plague banking and what are the solutions that lie ahead. Let me begin with the news point of the day. India's largest lender, the SBI, today reported a quarterly loss of $1.1 billion. And no, I haven't got that wrong. I haven't read it incorrectly. For the benefit of viewers, it's $1.1 billion loss in a single quarter. The chairman Rajneesh Kumar today said that the recognition of bad loans is largely over. This is what was told to us by Arundhati Bhattacharya as well, Mr. Pradeep Chaudhary. By when can we say that the worst is perhaps behind us? And by when can we believe that what is being said is perhaps right, that the worst is truly behind us?
Yeah, it will improve only when the customers of the bank, their financial health improves. Because bank does not have a financial health of its own. Bank's financial health is entirely a function of the financial health of its customer. And this also is happening right across all sectors. Even in public sector, the state distribution companies have defaulted and are sitting on a bad loans of about 60,000 crores. Similarly is the case with steel, power and so many other sectors, and which is cascading down to even other sectors like transportation. So the early signals that it could reverse is when we see a start of the capex cycle and when we see a earnings growth, neither of which is right now happening. Maybe these have stabilized. So, but the future is anybody's guess.
Actually, comment on that. Are you as do you agree with Mr. Chaudhary there that that the recovery is nowhere in sight? I mean, it's dependent on a host of factors which are largely not under the control of banks themselves. So it's too early to say that the worst is behind us.
Well, I wouldn't put it quite that way. Yes, there are systemic factors that are responsible. The slowdown of the economy has been a major contributor to the rise in NPAs. But many of the problems that we are facing today are self-inflicted, partly by the government, partly by the regulator, and of course banks themselves and the external environment. So while the Modi government has begun the cleanup process, unfortunately the way they have gone about it is that as a result of which we might suffer the short-term pain. In fact, not might suffer, we definitely are suffering the short-term pain, particularly in terms of banks withdrawing almost or not lending at all virtually. At the same time, the benefits of this cleanup process are not going to be realized unless we go about it in a better fashion. So today, even though the financials, as Tanya gave in her report, it would seem that the financials are far worse than they were in 2014. The fact is that the numbers are not quite comparable, because in 2014 we hadn't quite recognized the NPAs. Today there is much greater transparency. Almost all the NPAs have been recognized. So to that extent we have a much clearer picture, but that alone is not sufficient. Unless we do something to cure both the disease, the cause of the disease, as well as eliminate the symptoms, I'm afraid we're not going to get anywhere. So the way the Modi government has gone about it, that unfortunately is something that I don't agree with, as a result of which the short term pain that we are bearing today might not result in the benefit that we're hoping to achieve. That is something perhaps that we'll discuss further in the program, but for now the answer is that the Modi government, the position is worse, but that is in terms of financials, which are not comparable, and the cleanup could have been managed being much better, in which case we would have got the benefits apart from the pain.
You're saying the cleanup could have been managed better. Charan Singh Sapra represents the Congress party, and you know, before you get on to this, how Modi government has bungled Indian banking system, make no mistake, India is facing this crisis largely due to the mismanagement of banks in the UPA regime. I don't think anyone on the panel is going to dispute that claim, Charan Singh Sapra. I know you will eloquently quote the fact that NPA of banks was at 2.6 lakh crore rupees when Modi took over, and it has ballooned to over 9.5 lakh crores under this government. But as Maithili herself pointed out, is because the UPA turned a blind eye to the problem, and it is this government that has recognized the problem instead of brushing it under the carpet, that has recognized the problem and is dealing with it. Now you could argue whether it's dealing with it the right way or not, and that's something we will debate, but they've at least recognized the problem and are dealing with it. Charan Singh Sapra of the Congress party.
See, of course, even the Congress realized this problem, but by just saying that the loans were being given more when the Congress regime was there, this does not give a legitimate right to the current dispensation for the economic offenders to flee. This does not legitimize the current dispensation to allow the economic offenders to abscond. So somewhere this government has also flawed. They have also done a lot of mistakes. There's a low credit growth, there's a low private investment, there is a jobless growth. You know, the manufacturing industry is plunging down, the exports have plunged, you know, the entire economic growth is going downwards. So there are so many problems which this government has not been able to cater, and upon that this banking scam has come. Nearly 50 to 60,000 crores white money has gone out of this country. That is not due to the Congress government. It has gone right from below the nose of Narendra Modi government. So somewhere they have to reform, they have to take quick steps so that this money which has gone out comes back. And the NPAs have increased from 32% to 86, or probably even more than that. So they have to work out, they have to, you know, they have to bring in good reforms.
Mr. Sapra,
now.
one second, Mr. Sapra. I don't think you can take the high moral ground on NPAs. Let me be very clear on that. I think you can take a high moral ground on a lot of other things, but not on NPAs, because they were in the making when you were in power. So don't try and wash your hands off that mess to begin with. But I will take a question to the expert, and let me go across to Professor T.T.R. Ramon. And, you know, Professor, would you cut the NDA some slack on this one? Because this isn't a problem just of their own making. They did inherit a lot of mess. They were dealt a bad hand by the UPA as far as the NPAs go.
Well, yes, there is a legacy which the NDA government inherited, and that legacy was not necessarily because of, you know, corruption as is commonly perceived, corruption on the part of the UPA government. I think the NPA problem is substantially to be ascribed to factors which are extraneous to management, factors like the global financial crisis, adverse court judgments, the steel glut because of overproduction in China, various other sectoral issues. So first of all, I'd like to repudiate the notion that mismanagement or corruption is the principal reason for the NPA legacy which is handed to the NDA government. Now, so far as the Modi government itself is concerned, I do think that they were little late in reacting to the problem. So I think the initial reaction was somewhat tepid. They didn't seem to regard the banking cleanup as a high priority, or did not take the decisive steps that were required. So the substantial recapitalization that happened came only last year. What happened under the earlier Indradhanush plan was very inadequate recapitalization, nor were any substantive reforms introduced at the bank level. So I think I think the Modi government is to be blamed to the extent that it has been somewhat slow to react to the crisis. And what has happened, it's a case of too little too late, and the decisive steps that are needed to clean up the banking system have not been forthcoming. So we have seen some strong measures in the last few months, but those are not adequate.
Actually, you're actually really prompting me to my next question, which must go to the BJP and Syed Zafar Islam. Given the fact that you were a banker yourself by profession, is 4 years not enough to resolve the mess? Look at what T.T. Raman is saying, that perhaps too little is being done too late. Decisive steps that are being taken now should have been taken before. I mean, for how long will you keep blaming the UPA? For how long will you keep saying that you inherited a mess? Because the reality is you've now been in power for 4 years. And what you're doing right now, you should have done a lot before. If Indian banks are indeed so well managed, then how come PNB scam went undetected in your regime? It wasn't a creation just of the UPA, it went undetected in your regime. And you can't today turn around and say that we inherited this mess. You were too busy demonetizing instead of resolving the NPA issue, which Raghuram Rajan started. You put a halt to those plans, and you went ahead and did things in banking which should not have been done. So for how long will you give the excuse that you inherited the mess? Because 4 years is a long time to cure it.
Supriya, it's not how long, it is the statement of fact, it is the truth which everyone knows that we inherited. Let me give you one example. People often talk about in the market, particularly I'm talking about the banking sector or the financial market, that there is no credit offtake. What does that suggest? That the loan is not being disbursed by the banking system. Particularly I'm talking about the public sector banks. So there is no lending by the public sector banks. So whatever the outstanding loan sitting in their balance sheet is something which has been lent during UPA regime, and we all know how it was lent. Who are the people who are actually facilitating the loan? And I am professor, I must tell him that it's not because of corruption. I completely disagree with him. I think he has not understood the dynamics and the situation properly. Because as a banker, I know, and I must tell you that I can't go into specific things, but as a banker, I know the kind of corruption in banking system. I have seen it from my own eyes. All the public sector banks, the credit evaluation process was pathetic. They have never evaluated the credit properly. They have never understood the concept of this, how much needs to be taken as a security and the collateral, and they have always maintained the DSCR model is something which they will work on, and a lot of flexibility and the covenant they have always exercised purely at the end of the at different level of within the management system. So it is purely because of the understanding with the corporate and the management, and that's why more often you will see the project cost was much steeper than actual project cost was there, because the equity was coming primarily, all the private players was taking all the equity from the project cost itself by overstating the bill itself. So the lot of corruption, sir, lot of corruption was there, and that's why the first thing which we did to strengthen the credit evaluation process in the banking system, and that's why, and have a sound collateral system. And now the cases which we are talking often in the market, like for instance Vijay Mallya, how the loan has been given to him, has someone analyzed it? Can you say that it was not purely because of the understanding the UPA government that their leadership?
I take that point. I take that point. Zafar Islam. I take that point. I take that point. The idea is not to do, Zafar. This show, I take that point, but this show is not analyzing how loans were given in UPA. This show is analyzing state of banks in NDA. Since it's been 4 years since your government has come to power, we are talking about the state of banks and what steps you've taken in resolving the NPA mess. Pradeep Chaudhary, what could they have done more? to play the devil's advocate, first they streamlined the NPA recognition framework. By their effort, the NDA government, first they streamlined the NPA recognition framework, RBI forced the banks to recognize NPAs. Then they recapitalized banks, like Professor Rammohan pointed out, albeit started off by giving too tiny an amount and then came up with a big mega package last year. Then they've come up with a very strong bankruptcy framework that allows an exit for promoters, to these situations. So what could they have done differently, Mr. Chaudhary?
See, I think it is only in our country this kind of blame is apportioned, that this happened during that regime and that happened during this regime. Now, there is a banking crisis globally in 2008, 2009. But I don't think in US anybody blames that it was the previous administration we did and this is the new administration it did. This is an economic problem fundamentally, and I totally agree with Dr. Ram Mohan. See, these projects have been financed mostly by 20-25 banks, and in that there would be 3, 4, 5 major private sector banks. Now, even if we assume that the public sector banks were influenced, private sector banks were not influenced. So therefore, this is, I think, a position that is being taken is untenable. And what about the lending to electricity boards? Now, these were not influenced by politics. These were given to all kinds of states. It was given to UP, MP, Andhra Pradesh, Karnataka, Punjab. Of all kinds of political hues, the states were there, and it was not given because of a particular party being in power, but because of particular desire or need to reach out electricity to every citizen. So, I think we should stop apportioning the blame. The assets have not gone anywhere. For example, if you are seeing a settlement or a resolution of a large steel plant, the assets are all sitting there. But the thing is that the cost of production, the return on capital employed is so low that they cannot service the rates of interest. And the international rates are so low that those international companies are today much more efficient than Indian companies. And it is also to be seen that our exports are declining. Now, declining exports is a sure sign of loss of competitiveness. So therefore, I think we need to be a little dispassionate about this, and rather than jumping with this that blame the previous fellow, blame this fellow, and even in the bank, if I start blaming my predecessor and my successor, it will not go anywhere. The situation is there. It is not a creation of an individual or particularly of a person. It is a creation of the circumstances. But I would also agree that particularly the steel sector suffered for fairly long because of cheap imports, and I think the anti-dumping duties were instituted much later. So that is why the road has become more tough, and in fact RBI should have been a little more proactive a little earlier, because RBI was not keeping an oversight on how much provisioning is being made. It is like a strict traffic signal. If the traffic signal is not there, so people will go on their own way. So RBI should have come in and specified that this is the minimum provisioning we require, which never happened. So that is why you see divergence in provisioning. And today, even the private banks, you can see they don't walk on water. They are also coming face to face with the reality.
All right, Maithili, I will come to you, and I think Mr. Chaudhary has a point there that nowhere in the world does one regime blame the other for the banking crisis. There's a crisis on the street and everyone takes note of that. But, I just want to move away from what the RBI should have done timely or not, but on issues that have been taken care of, on action that has been taken. But in the process, have we taken way too many drastic steps to resolve the problem? With the RBI's latest NPA recognition guidelines, as Rajneesh Kumar puts it, there is little scope for anyone to hide anywhere now. And so you have an SBI that reports a $1 billion loss in a quarter, and a PNB reporting an even larger $1.97 billion loss. So I'm just saying, have too many drastic steps been taken? Perhaps warranted, perhaps not warranted, but how has that really worked?
Well, I would agree partially with Rajit Kumar, because the RBI, particularly the circular of February 12th, which tightened the screw so much on the bank and told the banks that every loan, for example, of 50 crores must be certified that there is no fraud involved. So the moment you start looking at every loan as if there was a fraud behind it, it makes bankers very reluctant and very wary to lend. So I think the RBI took a slightly unrealistic stand in terms of its provisioning, because take the case of mark-to-market treasury losses. The RBI initially said, no, you must mark all your provisioning, you must make immediately, and it was only later when they realized that they really shot themselves in the foot, and it was a case of cutting your nose to spite your face, that they told banks that you can stagger it. Of course, SBI chose not to use that provision, but the RBI, I think, has been a little unrealistic, particularly when it came to mark-to-market provisions, particularly when it came to some kind of recognition norms in terms of telling banks and looking at each and every loan as if there was a fraud behind it. Mind you, as Pradeep said, the RBI itself, immediately after the 2008 crisis, what was the signal that the government and the RBI sent? They told the banks, please lend liberally, lend to the infrastructure sectors. They removed exposure norms, they raised exposure norms, they raised a limit for individual credit committees and they said did away virtually with consortium discipline in a bid to keep the economy afloat. Today we are suffering the consequences, but it's not the RBI alone that is responsible. The government also has done very little to improve the governance in these banks. Look at the number of banks that are headless today. Look at the number of banks that really have no recourse whatsoever because they've been put under prompt corrective action. So it's a combination of factors, and unless you improve the governance, you have a bank board bureau which is virtually defunct. So I think both the government, the banks, as well as the RBI and the overall economic environment all are responsible for the mess that we find ourselves in today. And unless we do something to improve the governance, particularly of public sector banks, and it is true that private sector banks are also suffering high NPAs, but the high NPAs, the incidence is more in public sector banks.
Absolutely.
Clearly showing that public sector banks are suffering even more, partly because of the ownership issues.
True. Maithili, governance in public sector banks is something we will discuss, and I take that point. I think on governance, a lot more needs to be done. I think, not enough has been done. But Professor Rammohan, is the pain, the point that Supriya asked, Maithili, is the pain that the system is undergoing, is it worth the cleanup? I mean, how else could a reset have happened? If you don't act sternly, then you're going to be saddled with a situation where banks keep evergreening loans and wait for an economic recovery to happen. And that model has, frankly, not worked in many other countries. So, was this the right approach in that sense?
Well, I would agree with Maithili that the resolution framework proposed by RBI is somewhat harsh, and there is certainly room for relaxation. I mean to say that even a single day's default would qualify, would result in the loan being turned into a non-performing asset is certainly excessive when you look at the cash flow problems in infrastructure and small and medium enterprises, for instance. So I think there is scope for relaxation in the resolution framework. Sorry, your question is the pain excessive?
That's right. Is the pain worth the cleanup?
Well, yes. So is the pain worth the cleanup? Now, let me stick my neck out on this one, and at the risk of inviting flack all around, let me say that a certain amount of kicking of the can down the road is integral to banking. Now, the very expression kicking the can down the road has taken on a pejorative connotation. People think it's completely evil and there's some corruption involved. But unless there is some hand holding on the part of the banks when borrowers are going through rough times, it's very difficult to do banking. Now, the question is of proportion. I mean, if you have, in 80% of the cases, if you're kicking the can down the road, obviously there's something seriously wrong. But say if you do it in 15 to 20% of the cases, I think that's not only permissible but also inevitable in banking. And if you don't do this, then you're going to create very serious issues for the borrower as well as for yourself. So the commercial judgment of banks is very essential in these cases, and you must allow for the fact that the commercial judgment of the banks may allow you to help borrowers tide over a bad period instead of recognizing it immediately as an NPA and freezing further loans to them. So I think this point needs to be recognized. It's not as if there is virtue in immediately recognizing everything as an NPA, and the classic example is the assets which you have created in the power sector. Today the demand for power is somewhat weak, power prices are low for a variety of reasons, but it's not as if the situation is not going to change a few years down the road. So you mean to say that all the assets that have been created in power should be liquidated by recognizing them as an NPA and passing them into the IBC? Would it not be better? Would it not be better to handhold the power companies for a couple of years till the power situation turns around?
Right. Right. Professor Rammohan, you raise an important point about, some amount of kicking the can is perhaps integral to banking. But Syed Zafar Islam, how worried are you with this collateral damage? Because collateral damage will mean that things will stall. Collateral damage will mean that jobs will be lost. Collateral damage will mean that growth will take time to recover even more. And then, of course, there is this, there's this whole dilemma that if kicking the can is integral to banking, then you might as well do that. How worried are you about the collateral damage, or do you believe, or do you agree with Professor Rammohan that this is inevitable, will happen, even if it means at the cost of some jobs and growth?
See, there are two things which is very important. First, that one has to be sensitive that the recapitalization is not the only solution, because at the end of the day, it's taxpayers' money which is being used for recapitalization, and something which is, I think, is not fair. And the other thing is to put in place a resolution mechanism which was warranted, which was important, and that's why the resolution mechanism has been put in place, because all the other earlier resolution mechanism was something which cannot find any resolution. It is evident from the fact that recent steel transaction you were referring to, that is only possible purely because there is a resolution mechanism which is robust, which is something which is definitely kept in mind that one has to find a resolution, and that's why the resolution has been put in place, and today we see that a large transaction could take place. And a full cash transaction, of course, we also know how much money they had put in, that they had borrowed from the bank to put up the same project, and how much actually they have paid the value. What is required? What would have been required to put up the same plant if they had to put in a similar kind of plant? So we know that there is something which has gone wrong, and that's why they have not been able to service this debt, and that's why we have witnessed this situation. But you cannot be lenient, because the system was absolutely lenient. Today we are taking, yes, there is a collateral damage. We understand that dynamic because the credit offtake is not there, purely because the people are overly worried when they actually there is a proposal for acceptance for lending. They are overly worried. But away from that, this will all stabilize, and I'm sure that because the government intention is to only ensure that the right kind of a credit must be given, must be accepted by the bank, and no compromise should be done with bank officials as well as the borrower.
Okay, I take that point. You are saying there's no scope for leniency.
We have been able to address to some extent.
Okay, I take that point. You are saying there's no scope for leniency and that things will stabilize. Let's look ahead. Let's also look at some of the positive things that have happened. Pradeep Chaudhary does this, the point that Zafar Islam referred to, does a successful sale of Bhushan Steel to Tata Steel hold out hope that the current NPA crisis will slowly but surely get resolved in a clean, transparent manner. I mean, now we have a very strong framework. Yes, it is being challenged legally, but that, it was expected. We have a robust framework that is enabling resolution of these, of these cases. So, does that hold out hope for you, Pradeep Chaudhary?
See, today the resolution of the steel company has been good because steel prices were robust. If we were to resolve this steel company's debts 2 years back, I think the losses would have been twice, it would have fetched half value. Let us not, deceive ourselves. This kind of crisis, wherever it has happened, it has had a price. For example, the Southeast Asian crisis in the late 90s had a price, and the country suffered long years of austerity and low growth. Similarly, 2008, when it happened, the countries of Europe, and USA, they also had to take a lot of sacrifice. In USA, in fact, auto companies, their pension funds, the funds became almost zero because of this. So therefore, we have to be ready that this has a price and it won't happen tomorrow. And secondly, even in case of, the thing is being made that how much was lent and how much was used. See, in each of these IBC cases, there is a precondition that there has to be a forensic audit particularly by the big four firms which are at arm's length with the banks, and they have to certify that no amount of money has been siphoned off except for the project. And see the condition in 20 projects that have been taken up for IBC, not a single one, it has been found that there has been a forensic audit discovery that so much money has gone missing. So therefore, let us not, make this kind of thing, this kind of allegations without any basis. If there is really over padding of this, then why is the forensic audits not discovering those? So let us talk on facts, let us talk on, and let us not make uninformed comments. But the road from there, and secondly, it would be subjective. In fact, in this steel company case, we had given an additional funding for completing their project, and my board, the independent directors asked that what is the guarantee that this company will do well with this funding? I said there is no guarantee. It is like a patient being taken for operation. Now, is there a guarantee that the operation would be successful and patient would come back alive? No. But what is known that if you don't undertake the operation, the patient is sure to die. So that is the situation we are having. It is bad and worse. It is not good, better, best. So therefore, we have to make a choice that how do we want to come out of this, and this, I think all sections, all the policy makers and all the bankers and all the corporates, all the borrowers have to put their heads together, and finger pointing will only make it worse and will not lead to any constructive solution to the issue.
Indeed, indeed. We can't be choosing between good and best right now. We need to choose between bad and worse, and it's clearly a choice that we have made. But Mr. Sapra, let me come to you. For a government that was called Soot Boot Ki Sarkar, can you deny the fact that there has been a reset in the promoter-bank relationship? They have sent a signal to Indian promoters that you cannot take the bank system for a ride, because till so recently, Indian industry was treating debt as equity. Debt was being taken, all sorts of things were being done with that. And that perhaps has been reset, and like Raghuram Rajan puts it, it restored the sanctity of the debt contract in many ways. Will you grant the government this?
See, fairly, I would like to say the government is trying to do something about it, and I appreciate that. I need not criticize everything. But see, the fact is that the trade deficit has also increased under this government. Further, you see the recovery of NPA. When you see in 2013, it was around 22%. Now, as you come towards 2018, it goes down to 12%. Now, the rules were same in 2013 also and 2018 also. So the NPA recovery has plunged up to 12%. So somewhere there is an inefficiency within the system. I'm not trying to blame the government here. Let me make it clear. There is an inefficiency in the system which this government has realized at a very later stage. They would have reformed this, or they would have bought the reforms in 2015 also. But why so late? And I agree with Mr. Prateep Chaudhary, who was now talking, that we have to collectively do something about this system, which is, had gone a little from bad to worse. So we are totally cooperating with the government, but the issue is that sometimes this government doesn't bother about the opposition parties.
Okay.
They don't consult even people, the great economists like Dr. Manmohan Singh.
Okay.
This government is arrogant, egoistic, so they don't want to consult the opposition party. This is where the problem lies.
Okay, I take that point, Charan Singh Sapra, and I'm happy to see that you are striking a sort of constructive note in the debate. That's the idea really of the India development debate. We look at solutions, let's not go after blame game. But, Maithili, since we are talking of the IBC framework, are we seeing timely action on NPAs? I mean, 12 accounts were identified under the Insolvency and Bankruptcy Code, which constitutes about a quarter of the bad loans, and only one of that has been successfully resolved, and there's some amount of chest thumping that's happening as a result of that. In 11 of the 12 cases, the 270-day deadline has passed with no action. So, you know, are we seeing speedy resolution?
Well, yes, and here I would hold the amendment that the government passed, which virtually ruled out almost any serious contender for these assets. I would hold the government, that particular amendment, which first came by way of an ordinance and then was passed by Parliament, to be solely responsible for the fact that we virtually have an impasse. And as Pratip said, we are seeing interest basically only in steel, and that is because the steel sector has turned around remarkably. There is no interest in any of the other sectors. Power sector is in a mess, and we are not seeing any interest in the power sector. Telecom will soon be in the same predicament. So it is purely a sector specific revival that we are seeing, even in the case of the IBC. And the IBC code, though very well framed on paper, is very unrealistic in terms of ruling out almost virtually any serious contender. And we are seeing the problems that we have with case after case being embroiled in the courts, with one case after the other, and the deadlines never being adhered to. So I am afraid that unless the government has a serious rethink, and unfortunately here we have an expert committee, the Njeti Srinivasan committee, which has made some very good recommendations. Of course, there are some loopholes there too, but they have made some very good recommendations, and it's been 2 months since the committee submitted its recommendations, and the government just hasn't moved. So unless we do something more speedily to act on these recommendations, remove the flaws in the IBC, along with improving governance in the public sector banks particularly, I keep emphasizing the need for that, I'm afraid we're not going to see much of a solution as far as the banking problems are concerned.
Okay, let me just take this across to Professor T.T. Ramohan. And you know, while we're talking about the legislation being good on paper or not, given the balance sheet situation, is there a case for another mega recap package? For how long can we keep recapitalizing PSU banks with taxpayers' money is one part of the argument, and the other part of the argument is that if you don't put in money, where are they going to lend from, and how will that virtuous cycle take off? But my own sense is, why put good money behind bad? What's your take on this?
Well, I think one thing should be reasonably clear, which is that the way out is not to shrink the balance sheets of public sector banks or to freeze them where they are under prompt corrective action or whatever other step you might take, because that is not the way in which banks can come out of trouble at all. The only way in which they can come out of trouble is through more loan growth and more fee income. You know, some sort of increase in balance sheet size will be required for the vast majority of banks to come out of the problems they are in. So I don't think you know, that is the route we should take at all in terms of resolving the crisis. Recapitalization of banks, you know, this question is often asked, you know, should you be, how much of a drain on the fiscal exchequer can we permit the public sector banks to be? But here, you know, you have to look at the magnitudes in comparison with what has happened elsewhere in the world. There's virtually no economy in the world which has not gone through a banking crisis where the cost has been anything less than 5% of GDP. The cost in India, even after including the 2 trillion package, or you know, effectively the 1.4 trillion pack which the government put in last year, is less than about 2% of GDP. So it cannot be said that the cost is you know, out of line with what has been experienced elsewhere in the world. Without significant recapitalization of banks, I cannot see the banks coming out of the present situation at all.
There is no other way but to recapitalize public sector banks. That's the view from Professor T.T. Ramohan. Let's take the debate forward. And Zafar Islam, I want you to respond to the point that Maitri has repeatedly been making in the debate, which is on governance reforms, you know, improving the governance standard of state-owned bank. Has the government failed to act decisively in changing governance standards in PSU banks? You know, you came out with ambitious plans and schemes and statements in your early, you know, in the first few years, but all that counts for little if India's second largest PSU bank doesn't have the mechanism to reconcile SWIFT messages with its core banking system, as was exposed in the PNB fraud. So, you know, the quality of governance in public sector banks has not improved, and you haven't taken decisive steps to improve that. Zafar Islam.
No, Sandeep, see, historically, if you say that the way that public sector banks were managed, and you have one ex-chairman, former chairman sitting on your panel, and he can very well revalidate what I am saying, that the way it was being managed earlier and now it is being managed is very different. There is a lot of sensitiveness as part of the management, that there is a level of accountability which was missing completely, because the system, the government and the management both were working together, because they were complying whatever being asked by the government, they were complying irrespective whether the credit was good or not. They were complying, or whether the governance issue was there, whether they were ignoring it. Yes, they were ignoring it earlier, but today things have changed, because the interference of the government is completely have been put a full stop on that, and that's why the governance model of the bank must improve, and it has improved. It has improved significantly from what it was. Yes, there are incidents, and we cannot ignore that incidents. Yes, these incidents actually gives us a lesson that it needs to be further improved and make it much more robust than what it is today. But you cannot say that the governance model or the strengthening of the banking system have not been done since NDA government is in place. Purely that could have been achieved purely because there is absolutely no interference of the government officials with the in banking business, and that's why it was possible, and it will further improve. One thing which is very important, the credit offtake mechanism and the loan sanction mechanism, something, and the loan evaluation, the credit evaluation process, something which was not being done properly earlier. Now it is very meticulously done, and even the collateral, something which in many cases we have seen that the guarantees have been taken, but guarantees have not been collateralized in many of the public sector banks, if you see. But now those things are behind us, and we have put in a system that actually ensures that those loops all are completely plugged.
Okay, Zafar Islam, I think you make a broader point of how different things are. Let me ask Prateep Chaudhary, and sir, you've been the chair of SBI. Do you see a difference in the way PSU banks are being managed now? And is it realistic to presume that PSU banks can have operational freedom and autonomy the way private banks can?
See, even private banks' operational freedom, where has it taken them? I think the biggest scandals today are coming from private sector banks. In fact, public sector banks all put together cannot match up the scam in one private sector bank. Now that apart, see, the only, I think, significant change in governance, though I have not worked during the present government's time, is broadly I see separating the post of chairman and managing director. Now, except in SBI, in all other banks, the chairman and managing director's posts have been separated. But the jury is not yet out. That because of that, has it led to better results? Has it led to better governance, or it would have happened anyway? So it is very difficult to say that this has happened because of this and that has happened because of this, because the government of the day always says that whatever is happening is now the best. It has never been so good before. Because when we are blaming the banks for, credit expansion, let us also look at the asset expansion. The steel production of India today is the third highest in the world. Now we have moved from 25 million tons to 100 million tons production. Would it have happened without the bank loans? You look at the airports, how they were, and I am not talking of the metro airports alone, even the other airports, say Varanasi or Udaipur or Coimbatore, in the tier 2 cities. So would it have happened without the bank loans being there? So we are only blaming the bank loans but not seeing the assets that are being created. But I would agree with Dr. Ram Mohan that it is similar in most parts of the world. Even in China, when there was a boom in 2004 and they were hosting the Olympics and they thought that steel would just not be available. So there was a big boom in Chinese banks and they got fantastic realization, fantastic share prices issuing in the global markets. But all that has plummeted. They are down by 50-40% from their peaks. So this kind of bust and boom cycle are inherent in the economy, and the earlier kind of losses that were there were not brought in public domain.
Sure.
Because the steel companies caused a loss of 10,000 crores
Right.
to the government, to the institutions in late 90s.
Sure.
And even in early 80s,
Sure.
so much of loss was there due to textile companies, jute
Right.
companies and light engineering companies, but they went to the financial institutions
Right.
and they never were in public
Okay.
domain.
Okay.
They never came in for TV debates.
Okay, absolutely. Okay, point taken. We've just got what, less than 3 minutes on the show, and an important issue to cover, and that's privatization. Maithili, I know your views on this. Is privatization the answer, or is it too simplistic a solution? Because you can't deny, yes, Mr. Chaudhary spoke about the state of one private sector bank, but if you look at the asset quality of private banks, it's significantly better than that of most state-owned banks. So, is there a case for privatization? At least is there a case to reduce government ownership to 33% as recommended by Yashwant Sinha in the 90s?
Well, privatization certainly is far too simplistic an answer. It doesn't solve any problems at all, as we are seeing with the two big private sector banks which did lend to infrastructure and to corporates, and not about the one private sector bank which played it safe and never lent to these sectors at all. So the banks that did lend to infrastructure to large corporates are in virtually the same kind of predicament as they are as the public sector banks. In fact, the RBI's latest financial stability report speaks of the much sharper spike in stressed assets in these two large private sector banks as compared to public sector banks. So privatization is not an answer, but certainly reducing the government stake and reducing government interference, particularly when it comes to board composition, appointment of the top management. Look at the fact that the Deputy Governor of the Reserve Bank of India in charge of commercial banking, it's almost a year since Mr. Mundrao stepped down. We still don't have a Deputy Governor in charge of commercial banking. Many of the state-owned banks are headless. So I think these kind of problems would not have been there had the government followed the Nayak Committee recommendations, had a holding company, ensured arm's length distance and ensured that government interference, if not in their operational day-to-day transactions, but in all other matters would come down, whether it is opening Jan Dhan accounts, whether it is lending to priority sector, whether it is sending bank staff for election duty, whether asking public sector banks to do Aadhaar verification. Now these are all social objectives. You don't allow public sector banks to function as commercial entities. I think that is the kind of change we need to see, not privatization.
Per se may not be the answer, but I wonder who's going to do it if the banks won't. But I guess completely out of time here, I will take a quick last question to Professor T.T. Ramohan. And Professor Ramohan, finally, what is the verdict according to you? Given the fact that they inherited this problem to a large extent, would you say that there has been a big bank cleanup? Does this go down as a hit or a miss? Or do you believe that a lot more perhaps needed to be done in the last 4 years?
Yes, well, I think a lot more could have been done, and there are three principal issues which they should have tackled and which have not been tackled effectively so far. The first is to fix management, which is to have the right people in place at the heads of public sector banks and on time, not leave them headless for long spells of time, which is happening even today. The second step is to fix governance, which is to reconstitute the boards and to significantly strengthen them by induction of high quality independent directors. And the third step, which they should have taken, is to significantly empower bank management to arrive at resolution of assets instead of wholly relying on the IBC process. I don't think that is the right way of resolution at all, because whatever the early successes we may have seen, when hundreds of cases start going to the IBC, I think the system will be sorely tested. So I think you need to empower bank management to arrive at resolution of NPAs, and that has not happened at public sector banks.
Okay, the jury is still out on whether or not there has been a big bank cleanup in the 4 years of the Modi government. The problem is colossal. The solutions aren't easy, long drawn out and often very painful. But this is the one problem that needs to be fixed. And I think it's in the interest of the economy at large that the RBI, the government, banks and every stakeholder and industry get together to find some long-lasting solutions to the problems facing our banking sector. Can't thank this wonderful panel enough for joining us in this constructive dialogue on the state of the banking sector as this government completes 4 years in office.
Indeed. Thanks very much, viewers, for tuning in, because up next is Top 10 at 10. Stay right here with us at TT Now.